But let's get the detail. Joining me for what did move the markets today, Jacobus Brink, Chief Investment Officer over at Schmidt Family Office. Jacobus, good afternoon, sir. Have you seen anything around Karoo? I mean, it started off real good for them at the start of the week, and now the share price finishing in excess of 9% lower. Your thoughts on what could be driving that counter?
Good afternoon, Fifi. Always a pleasure to see you, and thanks so much for the opportunity. Yeah, I think it's an interesting one, you know. If you just look at the US markets today, it's close to a bit of a bloodbath post Tesla and Alphabet earnings we saw last night. Tesla, obviously, margins not looking great. And even in the case of Alphabet, you know, YouTube, their advertising revenue, which is obviously driving a lot of that share price, still growing, but slower than expected. So that's why you pretty much see red all over the tech sector today. I think, you know, just there was such a lot riding on this Q2 earnings numbers out. These are obviously the first of the bigger ones to report. So I think to a large extent it's a tech story. Obviously they are listed on the NASDAQ. And I think what's making the move sort of exacerbating it is definitely the fact that the liquidity on the stock is very limited, you know, so there's not a lot of liquidity around. So I think it is getting squeezed a little bit from that point of view, despite the fact that they released phenomenal results earlier in the week. So I think it's a bit of a technical one, this more than anything else, really. And then obviously the news coming out that they will be providing a secondary public offering, and these shares will be made available by CEO. So the market could be seeing that as signaling that, you know, there might be a sort of a less of a positivity from insiders, if you will. Yeah, so I think it's a bunch of technical factors that's really driving this one, and you know the fact that the company, the share price has rallied about 100% since the bounce we saw in November last year. So I think a lot of technicalities sort of around this move, but still an interesting one to watch.
Certainly, and just to further contextualize that move, so down 9% right now, but as you said, the share price has had a strong rally, up 39% since January. AECI not finishing on the day's lows. However, at one point I saw that counter was down over 12%. Not that bad right now, but management seems a little bit more confident that the first half was marked by a whole lot of once-offs that are not going to repeat themselves in the second half. Why does it seem as though the market is not as confident, or the market doesn't share the similar optimistic sentiment?
Yeah, AECI, I think more of an interesting one. You know, I think to a large extent, you know, they did benefit a lot of the SA Inc. trade post the election results. You know, steady, I think about 30% rally off that. So maybe just a little bit pulling back. You know, I think there's nothing really concerning me too much with regards to the news out today. As you mentioned, you know, if you look through normalized earnings, still sort of there or thereabouts, but you know, it came off some good earnings in 2023, so it's coming off a fairly high base, and I think that sort of is driving this move more than anything else. You know, as I mentioned, to me, nothing really stand out. You know, if you look through normalized earnings, it still looks okay, you know, but I think other than that, also just a little pullback. We have been starting to take a little bit off the table as far as SA Inc. names are concerned, post a very strong rally after election results. So still bullish on SA Inc. as a whole. You know, I just think it ran quite hard very fast. So maybe just a bit of a relief pullback more than anything else.
Sure. A point noted. I mean, up 17% over the past year. And the statement does guide that the weakness in the second half this time around is coming from a record, the weakness in the first half this time around coming from a record first half the same period a year ago. Vodacom, so finally it would seem that some of the selling pressure that we have seen out of telecoms being arrested in today's session, has that got to do with the update coming out of Vodacom? Because I saw a bit of an uplift for telecom as well.
Yeah, and I think so. They reported a 1.5% rise in group revenue for the quarter. Service revenue was very strong, rising 10%. And I think what's also helped their performance a lot was the performance not only out of Egypt, but we also saw some good results out of some of its other African territories, which obviously helped a lot. It has battled some foreign exchange rate headwinds over the last couple of quarters. But, I think, star performer today, and I think it's dragging the whole telecom sector higher.
Yeah. The rand weaker again. I was just looking for some commentary. I saw that yesterday's weakness came as a surprise to quite a number of market participants. Yesterday, in which, of course, the rand was one of the third worst performing emerging market currencies. But we're still weak right now, even though inflation is showing that we're going in the right direction. Bank of America is saying that it's not shooting the lights out just yet. But your thoughts on the latest inflation print and any changes in your view on how soon we could get cuts as a result of what you did see today?
Yeah, and I think, today's numbers, obviously, great news if you look at it in the larger context. Inflation coming in more or less in line with what economists were expecting. Slightly lower on the month-on-month number, which is great. Still some concerns around goods and services, which were up, on a fairly sticky basis around sort of the high teen numbers. But food and transport, 4.6% and 5.5% respectively. And I think, the market's currently pricing in a fairly high probability of a rate cut at the September meeting and possibly another 25 basis points at the November meeting. So I think, today's number definitely moving in the right direction. The fact that it is lower and the fact that the MPC could now start cutting earlier, might have put some additional pressure on the rand. But the rand has actually been remarkably steady today, given the risk-off sentiment that we're seeing in global markets. It's a bit, I was sort of almost, the one thing I always get wrong is the direction of the rand. But I think, after we started closing the week last week below 18, I thought, okay, this could be the impetus to get it lower. But obviously we had the dollar rallying. Thought gold would give it a little bit of support, but that seems to not be the case really, because gold is up a little bit. But I think, it's sort of more a risk-off type of move. There's a lot riding on the personal consumption expenditure coming out on Friday in the US. So I think markets are sort of nervous. There's a lot of stuff going on. You've got the US election now with Kamala Harris, all of a sudden really making a push, against Donald Trump. Just if you look at the betting markets. There's a lot going on. And I think for all of this bad news that we're seeing today, in addition, I might just highlight that we saw manufacturing PMI numbers out of the US, and those came out in contractionary territory, which is really a concern. I think the rand's holding up remarkably well. Yeah.
You're right, it was a lot of news to digest today, but thank you so much for summarizing it quite nicely for us, Jacobus. Until next time we chat, Jacobus Brink, Chief Investment Officer over at Schmidt Family Office.